Welcome to the deep dive. Today we're getting into something, well, something absolutely vital for anyone in the fitness business.
That's right.
Whether you're running an independent studio, maybe you're a personal trainer thinking about expanding, we're talking about how to secure the capital you really need to grow.
And we're diving into a specific, really useful resource for this. It's a white paper by jthomas. He's a real expert in the gym business space.
Right. The title is Funding Your Gym Business with an Unsecured Loan, a Smart Path to Growth.
Exactly.
So our mission here today, we want to pull out the key insights from this paper, kind of give you a shortcut to understanding how unsecured loans could potentially be a game changer for your gym.
Mm-hmm. And it's fascinating, isn't it, how often great vision, real effort, it just falls short sometimes simply because the funding isn't there.
Yeah, exactly.
This paper tackles that head on. It highlights a really significant potential solution.
And this deep dive, it's specifically for you listening, gym owners, operators, managers, salespeople, gym entrepreneurs, personal trainers, basically anyone focused on growing a fitness business.
Yeah, finding that funding is often the missing piece.
Okay, let's unpack this. jthomas, in the paper, he really drives home the point that running any gym business, first studio or established one, it needs one thing above all else.
Capital.
Access to capital, exactly. Without it, even the best plans can just, well, stall out. The paper actually says, too often, great operators with strong visions fall short because they simply don't have the funding.
It's so true. And if we connect this to the bigger picture, capital isn't just about buying stuff. It's about being agile.
Right.
It lets you jump on opportunities, avoid those unexpected cash shortfalls that can really derail things.
So here's where it gets really interesting. Thomas points specifically to unsecured loans, so they can make all the difference in keeping that momentum going. We're talking funding amounts from $50,000 up to $500,000. And the best part,
Real collateral.
no collateral required. That just seems huge.
It is. That immediate allure of no collateral, it fundamentally changes the risk profile for a business owner. It removes a massive psychological hurdle.
How so? What's the practical impact for someone listening?
Well, think about it. You're not risking your personal assets, your home, your car. That's a big deal for entrepreneurs. It takes that personal risk factor way down.
Okay, that makes sense.
And the paper's clear, this isn't just for, huge fitness chains. It's for everyone. Launching that first studio, scaling up, even just covering short-term expenses, it really broadens who this can help.
So what does this all mean compared to, say, traditional loans? The paper explains that those often come with, well, strings attached.
Right. Collateral requirements, as we said, but also restrictions on how you can use the money.
And lengthy approvals, too. That can be a killer.
Definitely. Those are real barriers, especially when you need to move quickly in the fitness world. Thomas calls them unnecessary stress and delay.
That lack of flexibility can really hold you back, can't it?
It absolutely can. If the bank says you can only spend it on X, but your real need is Y, well, that's not helpful. And waiting months, you could miss a huge opportunity.
So jthomas outlines 3 key advantages for these unsecured loans. He calls them a game changer. Let's break those down. First, as we've touched on, no collateral required.
Yeah, we've covered that, but it's worth stressing. You don't have to put your personal life on the line financially. That empowers owners, takes away a major stressor.
Okay. Advantage number 2, no restrictions on use. This sounds incredibly freeing for a business owner.
It really is. This means the money works for your specific needs, whatever they are right now, not the bank's agenda.
So total control over where the money goes.
Complete control. Payroll, new treadmills, a marketing push, fixing the leaky roof. Whatever your priority is, it serves your business strategy.
Got it. And the third advantage, and I think this one will resonate with a lot of busy gym owners, fast access to cash.
This is crucial. The paper mentions same-day pre-approval often.
Same day. Wow.
And funding, typically within about a week. Think about that speed.
So you can make decisions quickly.
Exactly. Act decisively. Grab that opportunity. Fix that problem now, not months down the line. That agility, as the paper points out, gives gym owners control over their financial destiny. You're not stuck waiting on a slow bank.
Okay, so those are some pretty compelling advantages. The next logical question then is, what does it actually take to qualify? Is this something attainable?
Well, jthomas describes the requirements as, and I quote, straightforward and achievable for many gym owners and fitness entrepreneurs. So it's designed to be accessible.
Yeah.
What's interesting is how they balance responsibility without being overly restrictive. There are 2 main things they look at.
What are they?
First, your credit score. The paper says 680 or better, and that's across the main bureaus. Equifax, Experian, TransUnion, just verifying, a baseline of financial stability.
680 or better.
Okay.
And income.
Yep. Yep. A minimum income of $50,000 per year. And they verify that with your 2 most recent U.S. tax returns. Again, seems like a reasonable benchmark to show you can handle the financing.
Right. Straightforward, like you said. But what if someone doesn't quite meet those on their own? Maybe they're just starting out.
And here's another key detail the paper highlights. Co-signers are welcome.
Oh, that's interesting.
Yeah, it mentions roughly 20–30% of approvals actually include a co-signer. So it offers a second path to funding.
What's the real value of allowing co-signers, do you think?
I think it shows a real understanding of the entrepreneurial journey. Maybe you're a fantastic operator, great vision, but you just need a little extra support on the financial side to meet those criteria initially.
So it opens the door wider.
Exactly. It broadens the accessibility, makes sure more good ideas, more passionate gym owners can actually get the support they need.
Okay, let's talk about the application process itself. The paper really emphasizes the simplicity and speed. It sounds like they want to avoid that long, drawn-out process you get with some loans.
Definitely. The message is clear. This isn't meant to be a month-long headache. Gym owners have gyms to run.
Right. So how simple is it? The paper breaks it down.
Yeah, into just 3 basic steps. Very clear.
Okay, walk us through them. Step 1.
It starts with pre-approval. You submit your basic info, and like we said, you often get a decision the same day.
Same day pre-approval. That initial feedback must be incredibly helpful for planning.
Absolutely. Then, step 2 is paperwork. Once you're pre-approved, you provide the necessary documents, tax returns, things like that, to verify you meet the criteria. Standard stuff, but streamlined.
Okay, makes sense. And the final step.
Approval and funding. Once everything checks out and you're formally approved, the funds can be in your account, usually within a week.
Wow. From first inquiry to cash in hand within potentially a week or so.
That's the goal. It's a remarkably quick turnaround.
So, just thinking big picture here, why is that speed so beneficial for a gym owner who's already juggling a million things?
Well, time is money, right? Especially in a small business. Spending less time stuck in what the paper calls financial limbo.
Uh-huh. Yeah, good term.
It means more time focusing on running the gym, serving your members, coaching your staff. That efficiency isn't just convenient, it's a real competitive edge.
You can react faster.
React faster, grab opportunities before they vanish, deal with issues before they escalate. It keeps you proactive.
Okay, so you get the funds and it's fast. Now let's circle back to that no restrictions on use benefit. What does that actually look like for a gym owner? How are people using this money?
The paper says this offers unmatched flexibility, and it lists several really common, impactful ways gym owners use this type of funding.
Give us some examples.
Okay, one big one, covering a payroll crunch. Maybe it's a slow season, cash flow dips unexpectedly. Making sure staff get paid is obviously critical.
Absolutely essential. What else?
Tenant improvements, or TI. Things like, new paint, maybe upgrading the locker rooms, better flooring, modern lighting, stuff that improves the member experience.
Right. Things that make the place look and feel better, which helps keep members happy.
Exactly. Happy members stay longer. Then there's equipment purchases. Investing in the latest cardio, maybe some new strength machines, or even those trendy recovery tools. Staying current is key.
Keeps you competitive. People notice new equipment.
They definitely do. And of course, marketing and sales campaigns. You need to drive new members, right?
Always.
So funding high-impact campaigns, maybe digital ads, referral programs, putting money directly towards bringing people in the door.
Makes sense. Any others?
Yeah, one more key one, especially for new gyms, startup revenue. That initial period before the membership dues really start rolling in consistently, this funding can bridge that gap.
So it covers a really wide range of needs, from immediate problems to growth investments.
Precisely. And what's fascinating, as the paper points out, is these aren't just about fixing problems. They are, and I quote, catalysts for growth. Well, investing in those tenant improvements, the new equipment, the marketing, that stuff directly leads to a better member experience, better retention, and ultimately more revenue.
So it's not just plugging holes, it's building a stronger foundation.
Exactly. It highlights how using capital strategically can shift a gym from just, surviving day to day to actually thriving and growing. That flexibility lets you target your biggest opportunity.
Okay, moving towards the end here. The white paper makes a really strong case for acting now, for being decisive. It states, In the fitness business, speed and decisiveness matter.
That's a key takeaway.
Waiting too long, whether it's fixing a problem or jumping on an opportunity, that delay can end up costing you way more than the interest on a loan would. You lose momentum.
That's such a critical point. Inaction has a cost, too. Missed members, lost opportunities, maybe competitors getting ahead.
Jim Thomas uses this great analogy in the paper. He says, an unsecured loan ensures you're never forced to play defense when you should be playing offense. I like that.
That's a powerful way to put it. It's about being proactive, driving forward.
Right. So whether you're just opening your first place, maybe expanding to a second location, or just need to fix a short-term cash gap, or reinvest to keep your facility feeling fresh, the paper positions this program as the fuel to move forward with confidence.
Taking that bigger view, it's really about strategic positioning, isn't it? It's not just about the money itself.
Explain that.
Well, having the ability to get capital quickly lets you pivot when you need to, innovate, respond to what the market wants, instead of just being stuck because cash flow is tight. You're controlling your destiny, not reacting to circumstances.
So it keeps you in the driver's seat.
Exactly.
Yeah.
And that concluding thought in the paper just sums it all up perfectly. The right funding at the right time isn't just money, it's momentum.
Momentum. That feels absolutely crucial in the fitness world.
It really is. Stagnation can be deadly.
Okay, so let's try to wrap this up. What does this all mean for our listeners? We've looked at Jim Thomas's white paper, and it really lays out a clear path, or at least a potential path, to growth using unsecured loans.
Yeah, the key features stand out. $50K to $500K options, no collateral needed, no restrictions on using the funds.
And that incredibly fast access, it makes it a really flexible and accessible option for many.
Plus the straightforward qualifications, the fact that cosigners are an option, that same-day pre-approval possibility, and the quick funding turnaround.
It means if you qualify, you could be just days away from making those investments you know your gym needs. So maybe a final provocative thought for you, the listener, based on all this. If a lack of capital, if that's been the main thing holding you back from taking that next big step for your gym, what opportunities have you actually been missing?
Yeah, and what would it truly mean for your business, for your members, for you, if you could finally seize those opportunities?
Something to think about.
Definitely. And if you've been hesitant, the white paper itself, points towards exploring this further. For more details on the specific program discussed in the paper, it suggests contacting Jim Thomas directly.
Right. The contact info mentioned is phone 214-629-7223 or email jthomas@fmconsulting.net.
Or visiting the website, fmconsulting.net. It's worth investigating if funding has been that barrier.
Absolutely. Well, that's all the time we have for this deep dive into funding your gym business. We really hope this gave you some clear insights and maybe some actionable information.
Hope it helps you think about your next steps.
Until next time, keep learning, keep growing, and keep pushing your fitness business forward.